Hello, everyone. Mike Arnold here, co-founder of Path Trading Partners, along with Bob Iacchino. Hope everyone had a happy Thanksgiving for those who celebrated in the U.S. and everyone else had a little quieter period with U.S. markets being closed in shortened days. So let's get ready. December launching off this week. Going to be busy until the slowdown for Christmas and the New Year. All right, XLE for our sectors. Still in long-term buy mode. Coming back down, little pullback here. Going to add some more things in, connecting with the weekly rotation zone and rotating back up. So we had on the shorter term a little confirmed but not triggered double top, and this move up invalidated it. So that's not in place. What I will be watching though, now we have this key low right at the 25% harmonic. If that breaks down, we're into an advanced clear path move with 89.40 being the first area. And then if that breaks down, we could easily see a retracement of 50% of this last up move. So this is the key point. If this starts breaking down in the short term, it would just be trailing stops, no new entries, waiting for this to pull back. It could even reconnect with the 200 simple area. So, even below 80, where would that take us? Wouldn't take us potentially to a longer term sell mode, but watching for a pullback. It is still overbought. We are overbought. We've reconnected with that weekly rotation zone. Cycles are rotating down, coming out of overbought area here. So I am going to be very patient with the energy sector. XLRE, real estate, still in long-term sell. Not really touching much here. It has come up into the weekly rotation zone, and even on a little more rally, you have the huge resistance from the 200 week overhead. You see here support, 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 support. Now this has turned into very significant resistance. So personally not touching anything with real estate. Also, with this little flagging channel pattern, we do have a potential double top. All right, we have a potential double top, and we have a gap left behind. So that would trigger below 37.26 on a closing basis and trigger a pullback all the way potentially to 35.31. Although the major targets I'd be watching for would be 36.30 and 35.80. Daily cycles at the top, weekly cycles at the top against very key resistance, not only from a moving average perspective. Right overhead is also the 50% retracement from this last down move, and the prior support becoming resistance area. So this is very key for XLRE. Would not be considering anything from the long side. XLF, the financial sector, still now. We had the aggressive buy mode slash conservative hold mode triggered. Now this is a buy, both triggered. So we could easily see, and we're back above the 50. So next target areas are about 36.65 to 36.80. And then major is 37.16 on a closing basis. Why? If we close above there, we should continue to see even higher prices. All right, so this is technically in buy mode again. Buy mode again for the financial sector. Let's just take a look. So we also have the first cross of the rotation zone. Even on pullbacks, we have major support coming in back at about 34, just in front of 34, 34.13. The only thing I would keep an eye on in the short term would not be chasing anything financial sector-wise if this potential double top on the daily is triggered. It's got some key support to burn through, but that's what I will be watching, because then that would take any financial plays in the very short term off the table, and that would need a close below 34.76 to trigger. And then that would be a pullback into definitely the weekly rotation zone. I would actually be potentially utilizing that, though, as if there's a good setups in the financial sector to keep an eye on it, it probably would not tip it back, and it would just tip it back to neutral mode, not a sell mode. XLK technology still stuck in this 50% harmonic from the last thing, still in long-term sell. From the rotation zone back, still above the rotation zone. There's major overhead resistance about 137. So that's what I'm watching on a continued rally. Definitely in overbought cycles at the top. And this is sloppy, but I am paying attention to it. Why? Because if we get a daily close below 129.62, we could easily we have a gap left behind. We could easily retrace to 123.69. So that's my warning shot. And also that would trigger exactly at the prior resistance becoming support breakdown area. Pay attention to that coming up. So that's technology. XLI, technically, the industrials back in before it was aggressive buy / hold, a conservative hold, aggressive buy, conservative hold. Now it is in the longer term buy mode. Also, remember we closed above 62.5, had a little pausing week last week, and now moving up. We should still reconnect even on pullbacks to 104.74 area. If you look here, got now the cross of the rotation zone coming up, and on a daily basis, this is not a double top. On a daily basis also, on any pullback, this would be you have a prior support area, prior resistance area becoming support right in here with the rising rotation zone. So I'm watching this area to hold anywhere, preferably above 100. But even if it slightly dips in that rotation zone, I'd be watching for industrial sector plays because they could continue to unfold over the coming weeks, at least going into the end of this year. So that is a definite sector that is on the radar screen. XLY, consumer discretionary. This double is still technically in place, not triggered so far, just a sideways consolidation, still in long-term sell, still holding against the weekly rotation zone, and major resistance overhead might not even trigger this if this does rally. Cycles at the top. So at this point, I'm not touching anything unless that longer term pattern does trigger. That is about all that I'm watching for. What would make me really start to watch for breakdown plays again would be a daily close below 138.20. Why? No, this is not a double top, but we have a large gap to the lows potentially back from the 9th of November to fill on a breakdown play. So that would be looking for shorts in consumer discretionary. XLP, still an aggressive buy / conservative hold levels. We did get a close, remember, a couple weeks ago above the 62.5. Last week hitting the 75. This week reconnecting with the 87.5. So that's where that stands. So it's fulfilled the 62.5% rule, and now is in still aggressive buy hold mode. If it gets above the 77.04, then we'll redraw the harmonics, and come up with higher targets. But for consumer staples, getting overbought and cycles at the top on the weekly basis, I'm going to not be chasing this at this point. It's way overextended on the daily with the cycles at the top and very overbought. Watching for a pullback on this, and aggressive support is about 75 area. Conservative support is all the way back to 73.90. I am definitely watching for a pullback before chasing any consumer staples at this point. Look, going all the way back to the topping area in September. So fulfilling that rule right there, but not my advice, do not chase at this point. XLV Healthcare. Last week, 134.62 was the key closing area that we were watching for. Last week closed at 134.57, just missing it, but continues to march higher. This is in, I don't know what happened to my arrow there, but it is in long-term buy mode after last week, or more medium to longer term buy mode. Should continue to see healthcare marching up to about 140.50, even on pullbacks. Major support coming in at 134. Let's check. Cycles are at the top and overbought. So at this point, I would be raising stops on any healthcare plays, but not chasing at this point. I'd be watching for pullbacks in healthcare plays or new setups unfolding on any pullbacks. That's where we sit. There's no short-term pattern. You see here a very aggressive move higher. If you want your first level of support, it'll be coming in about 134.70, and then I watch 134. Those are the two key areas of support. XLB, the material select spider in buy mode by the aggressive, the medium-term system. Still watching to see if it can get a close above 82.76. That would be a harmonic buy mode also. So at this point, materials are back on the table. Are back on the table now. Overbought and cycles at the top. So before chasing anything at this point, watching for a pullback play first. And we do have a potential double top. So if the double top triggers, then I will be much more patient with material select spiders, because we could easily come back down. We have a gap fill play here, and we could easily come back 76.60 area. So that's my key point. Unless we trigger that, it's okay from my perspective if we come back down and hold the 200 and rotate back up to start looking a little more aggressively for plays. But if this double does trigger, then in the short term, it's off the table for me. XLC Communications still is trying to put in a bottom, still in long-term sell, trying to put in a bottom. Not real interested on another pop-up. If there's any communication stocks that are still in bullish mode, there could be a little more room to run to about 52.60, which would be the 50% harmonic from this last down move and the weekly rotation zone. Not yet an overbought. Cycles getting to that top again, but not rolling over. So XLC communication plays would be very short-term swing patterns only for me. Not longer-term patterns. Short-term swing. Is this a potential double top? Yes, it is. That would completely take all plays off the table. All right? That would take all plays off the table if that were to trigger, and that would be on a closing basis below 48.84. So that's what's key for XLC, because then it would be a short-term and a long-term sell. Gaps left behind. Do not touch this from my perspective if that is triggered. XLU, utilities. Utilities is now in with the aggressive mode in a buy mode, conservative still a hold mode. So I'll just leave conservative a hold mode on there because you know what? If we get the close then above about 71.52, then utilities will be back in play again because we could see that return to about 76. With that, there's not a lot of great patterns on the weekly, and cycles are at the top, so I would not be chasing any utility plays at this and stalling out against a 200-day moving average. What I am watching for is to see if the utilities hold back at the 63 or 69.40 level to about 69.40 to about 68.85, and then I'd be looking for utility plays with another rotation back up. If this level does not hold, not going to touch it in the short term, but watching to see then if we get followed through to 62.50. It's aggressive to do any utility plays from my perspective. XRT, retail, still in long-term sell. Nothing has changed there. Still keeping an eye. We have a fair amount of overhead resistance, but I am watching the 67.85 level. Cycles are at the top and getting close to overbought, so I would not be chasing retail at this point if you're in any retail long. Okay, this is raised stops, especially you can see running up. I have the harmonics on here because I was verifying if it was a double top, and it did return that 87.5 level. Yes, this is a double top, and it's against the 200 where it stalled out back at the 15th of November. So as long as, you know, the bottom of this rotation zone on the daily holds, maybe on a pullback there could be some retail plays setting up. But if we get a daily close below 62.83, completely off the table because it's in long-term sell. This would be short-term sell. We got coming up on overbought with cycles getting to the toppy area again. The only thing that would shift this, I'd need to get that weekly close above 67.85. That'd be the only thing that would shift it for me. IYT transportation, nothing new. Still in long-term sell, stalling out against the 62.5 and no weekly close above it for the last 2 weeks. It did close above here, but has not been able to shift it to at least an aggressive buy / conservative hold pattern. Based off the harmonics, yes, it is triggered. If there are plays in this, it is at cycle tops. I would be patient and watch for pullbacks. Watch for pullbacks in here. Also, we are in that double top area. Let's just verify it. Let me verify it. I need to verify these numbers. 229.42, 229.43. This does qualify. So even on a little push higher, we could still be in double top territory. If it gets a close below 223.32, be watching for that pullback. So if there's transportation stocks that still look decent for an entry, it's okay. I'd be more in trailing stop mode for anything that you're already in. And then if this triggers, because it would be out of the way of also the daily rotation zone, if you get that close below a 219.41, would not be touching it in the short term. Semiconductors. Still not triggering an aggressive buy or hold. It did trigger on the harmonics. We should still potentially see a little higher push in semis. We are stalled out against a 50-week exponential. And this is stalling out against a 200-day and a double top. So I would completely take any semiconductor plays off the table on a daily close below 212.76. You could see a return easily to 195 area, 196 area, and there's still a major gap left behind. So, considering if there are some decent semi plays still in setups or you have trailing stops, that's fine. But you get that close below 172.76, or sorry, not 172.76, 212.76, then take everything off the table for the short term because you could get an easy big pullback in semiconductors. Also, cycles at the top nearly overbought, getting a rollover play, so that could all correspond. Trail stops, I would also use, if that did trigger that double top, into getting out on some plays and not even letting it hit my trailing stop targets. DBC, commodities, still in long-term buy. Not much going on there, but not a lot of great plays. We had some stuff trigger like copper, still gold, sort of plays in that, but it's pretty much stalled out and or pulled back. So I would be very patient on that in the short term and just wait for individual setups. DBA, there we go, DBA. The ag section still technically in buy mode, but not doing anything right now. GDX gold miners could be tipping to a more aggressive buy mode again. So I am watching for that and breakout plays, especially if you start seeing this get above about 29.35 on a daily basis. This could be a breakout. See, it's basing right at the 50, and you have room to run overhead. So I will be looking for this is the 50 week. I will be looking for potential plays in gold miners now. There is a daily potential double top. So you get a daily close below 29.76. Would not be doing anything in the short term because we could easily see a pullback to that 25 area. I will continue to look to plays unless that double top does trigger. VTV, value. Remember, a couple of weeks ago, got the close above 62.5, now up to 75. This is now in aggressive buy mode again, longer term hold mode. So still watching for this to come back to the tops in April area actually. We should technically hit 148.22 based off the probabilities. So what am I looking for in the short term? By the way, you can see the rotation zone crossing. We have cycles at the top and we are overbought, so would not chase anything at this point. We had that potential double, which never triggered or confirmed. So that was just a warning sign. Remember, you need these doubles to confirm and then trigger to be utilized, especially in the sectors. So right now, the prior resistance becoming support on any pullback, since it is in the longer term up move again. Watching for a pullback at least to 143.17. Could be all the way pullback to the prior 62.5 at 140.88. Would not chase anything here. Would just be raising stops on current value plays and waiting for that pullback to look for entries back into things. VUG, finally, Vanguard growth, still in long-term sell. However, we did trigger that double bottom pattern a couple weeks ago. So any growth plays are still on the table if they're good growth setups and only for short-term plays, not for long-term plays. Caveat is we are at cycle tops on the weekly. So we could see another pullback before continuing higher. You also see how that's triggered on the daily basis. The key area I would be watching for, let's just verify, I did not take a look at this earlier. No potential double top just yet. Just yet. If this does push higher, it could make a daily potential double top, which then we'd be at conflicting signals if that did trigger. We will keep an eye on that, and we'll have to update it during one of the live streams. With that, thank you everyone for tuning in, and I shall talk to you later. Bye for now.